Welcome to our comprehensive guide on Alaska tax residency, where we'll uncover the unique financial advantages that make Alaska stand out in the realm of state taxation. By establishing tax residency in Alaska, you can take advantage of significant benefits such as no state income tax, no state sales tax, and access to the permanent fund dividend, which pays residents an annual dividend from the state's oil revenues. But becoming a tax resident isn't as straightforward as merely visiting this beautiful state. We'll explore everything you need to know about truly making Alaska your tax home. To begin, it's essential to understand the concept of tax residency itself. Tax residency is what determines which state can tax your income. While all U.S. citizens are subject to federal taxes, state taxation can vary significantly. Typically, residency is established by factors such as your physical presence in the state, where your permanent home is located, and your intention to remain. In Alaska, establishing residency involves meeting specific requirements that include maintaining a significant physical presence, as well as demonstrating a commitment to making Alaska your permanent residence. The most tangible way to establish your tax residency in Alaska is through the physical presence test, which hinges on spending at least 183 days in the state each year, roughly half of the calendar. This residency requirement acts as a straightforward metric, allowing tax authorities to determine your connection to Alaska. Therefore, if you split your time between Alaska and other places, keeping a meticulous record of your days spent in each location becomes vital to proving your eligibility for residency. Creating domicile is another important aspect of establishing residency in Alaska. This means showing that Alaska is your permanent home, and it goes beyond merely counting days. You'll need to establish strong connections like obtaining a state driver's license, registering to vote, or opening bank accounts in Alaska. The more ties you can demonstrate to the state, the stronger your claim to domicile will be. This is particularly crucial if you have homes in multiple locations, as tax authorities will consider these factors when evaluating your residency status. Lastly, let's discuss the numerous benefits you can enjoy as an Alaska tax resident. First and foremost, the absence of a state income tax provides a huge financial advantage, especially for high-income earners. Additionally, eligibility for the permanent fund dividend gives residents a share of the state's oil revenues, usually amounting to $1,000 to $2,000 each year, a unique form of reverse taxation. Furthermore, Alaska's lack of estate or inheritance taxes makes it an attractive option for those focused on wealth preservation. But remember, establishing and maintaining residency is a commitment that requires serious planning and attention to detail.